Hello everyone, welcome to the IchimokuCharts.com daily analysis for the US dollar index for Monday, May the 17th, 2010. Change of character today for this market, and we have a red-bodied candle. Previously we had a series of green-bodied candles, and if we look back over the last few weeks, this is only the second red-bodied candle that we've had. Now the red body denotes that the sellers made some net bearish progress on the day. Unfortunately for the sellers, it was only a very small amount. It is a very small body compared to the previous bodies here. Now, while that says something about the strength of the trend to the upside, it also says something about the lack of strength of the bears. So even though the bulls aren't strong, the bears certainly aren't strong either. The worrying thing for the bulls, however, is this long shadow on the top of this candle. And that represents downside price rejection as the market tested this area of resistance at 86.87. There was potential resistance around that area from the previous level, and the market tried to trade up through there and sold off fairly significantly. On the trading day, the bears did close in control, and they did show some commitment on the trading day. The only thing was they weren't committed enough to actually change the trend, and the trend remains in a fairly strong uptrend with a higher high and a higher low. But the short-term dynamics aren't really supporting that. So we do need to be aware that there is potential for a change of trend to the downside. And it's little wonder when we look at the momentum that this market has built up over the last few weeks that there is potential for the market to come off and relax. Now this 86 level that the market previously found as support and resistance will potentially hold again. And we do need to watch that for support. If the market trades down through there, then the first area of potential support will be at 84.67.5 at the Tenkan Sen, which when the market is trending up quite strongly tends to be the area where the market will bounce off. There are some large shadows on the bottom of the candles around this area as well, down to 84.24, where there is potential for support. If that area fails, then we can certainly find potential for support at the Kijun Sen, which is at 83.54.5, and then through this zone there was a large zone of previous resistance, which is now support between 83.22 and 82.86. Certainly a lot of support all the way down through to the cloud of the Kumo. But the market retains its overall positive bias in the long-term, medium-term and short-term time frames. Some slight lack of power from the bulls at the moment suggests the potential for a minor sell-off, and look to potential support between 84.67.5 and 84.25.